Okay, I gotta be honest, the words US tax code, they don't exactly make me want to jump for joy. More like, hide under my blanket till April's over.
I think we've all been there.
But here's the thing, you don't need, like, a law degree to get a grip on the basics.
Exactly.
And that's what we're diving into today. We're gonna untangle this whole US tax system thing, maybe uncover some fun facts along the way, and who knows, you might even win your next water cooler debate with some of this knowledge.
Think of this deep dive as like a cheat sheet for understanding those confusing tax forms and jargon. We're using that Wikipedia article you send over, Taxation in the United States, and let me tell you, it's a goldmine.
Oh, I bet. So let's just jump right in. When we say taxes in the US, what are we even talking about? Feels like everything's taxed these days.
Right. Well, first thing to remember is the U.S. has this, what we call a multi-layered tax system.
Multi-layered, like a cake.
Exactly. You've got layers of government, right? Federal, state, even local, all wanting their slice.
Hold on, so you're telling me I could be taxed on, like, the same income 3 times by the feds, my state, and my city.
You got it. And it's not just income. We're talking property purchases. It gets, well, pretty intricate.
Starting to see why accountants are always in business. Okay, so multiple levels of government taking a bite. What about the types of taxes? Income tax, property tax, sales tax?
Sure.
Anything else I'm forgetting?
Well, those are the big ones for most folks.
No.
But there are also payroll taxes, right? Those
Yeah.
cover your Social Security, Medicare, unemployment, that kind of thing.
Right.
And here's something that might surprise you. Even though our system seems, well, complicated, the U.S. actually collects less tax as a percentage of GDP than the average developed country, at least according to your source.
Wait, seriously, we have this whole complicated system, and we're bringing in less than other comparable countries. Okay, we're gonna have to unpack that another time. But for now, let's tackle the big one: income tax.
Ah, yes, income tax, the one everyone loves to hate. You know, it might surprise you to know that income tax, well, it wasn't always a permanent fixture in the U.S.
Wait, really? I thought income tax was like as American as apple pie.
You'd think so, wouldn't you? But the first U.S. income tax actually came about during the Civil War. Lincoln needed a way to fund the war effort, and bam, income tax was born. But once the war ended, gone. They abolished it.
Wow. Okay, so if it went away, how did it come back?
Well, this is where it gets interesting. The return of the income tax involved a whole constitutional amendment, and get this, a landmark Supreme Court case.
Ooh, that sounds juicy.
See, back in 1895, the Supreme Court, they ruled in a case called Pollock v. Farmers Loan and Trust Cupper that taxing income from certain sources, like investments and rent, was unconstitutional. They called it a direct tax, you see.
Hold on, direct tax. Explain it to me like I'm 5.
Basically, back then, a direct tax was a tax levied directly on a person based on them owning something, property, or in this case, income. And the Constitution at that time said direct taxes had to be divided between states based on population. Logistical nightmare.
Okay, so to get around this whole direct tax problem, they had to actually change the Constitution.
Bingo! And that's how we got the 16th Amendment. Ratified in 1913, it gave Congress the power to levy income tax on pretty much every kind of income without getting bogged down by those apportionment rules. And that, my friend, is how we got the income tax system we have today.
Wow. So one court case and a whole amendment changed how we do taxes in America. Wild. I mean, but let's talk specifics. Once this whole income tax thing became permanent, how did they decide who pays what? Did everyone just pay the same tax rate?
Not quite. That's where the concept of progressive taxation comes in.
Okay. And what is that exactly?
The idea, in theory at least, is that the more you earn, the higher percentage of your income you pay in taxes. So higher earners, higher rates.
Makes sense on the surface, but I'm guessing it's not quite that straightforward in reality.
You'd be right to be skeptical. The U.S. tax code, well, let's just say simple isn't the word that comes to mind. We've got these things called tax brackets, where income is taxed at higher and higher rates as you move up the income ladder.
Okay, so more you make, more you pay.
Got it. Right now, federal income tax rates, they range from 10% to 37%. But, and this is the big but, how those brackets actually work and who they impact, that's a whole other story.
I bet. And I have a feeling we'll be getting into all that and more. But first, a quick break. We'll be right back to dive deeper into the wild world of U.S. taxation.
All right, so we're back and we're knee-deep in the U.S. tax system. Before the break, we were talking about income tax, but I know there's a whole universe of other taxes out there.
Oh, absolutely. We could spend hours talking about the different types of taxes in the U.S. And believe me, I'm tempted. But for now, let's maybe tackle one that doesn't get as much attention. Property tax. Let's deal with that one.
Property tax. Yeah, you're right. It doesn't exactly have the same ring to it as income tax, does it? But it's a big one, especially at the local level.
So when I think property tax, I think like homeowners, right? That big bill they get every year.
You're not wrong. It's a major source of funding for things like schools, roads, parks, local stuff. But it's not just about houses. Property tax can apply to other types of property too. Commercial real estate, even land.
Oh, interesting. So like that empty lot down the street that everyone wants to build on, that could be subject to property taxes too.
You got it. And here's where it gets, a little crazy. Property tax rates, they can change a lot depending on where you live.
Oh, yeah, that's right. I've heard stories of people, moving across state lines just to escape those high property taxes in certain areas. It's crazy. But okay, let's circle back to something you mentioned earlier, those deductions. You were saying there's more to it than meets the eye.
Oh, yeah. Deductions are where the U.S. tax code gets, well, let's just say, interesting.
Tell me about it. Every time I think I'm starting to get a handle on this stuff, I swear some new deduction pops up out of nowhere. It's like, is there a deduction for, like, owning a pet turtle? Because at this point, I wouldn't be surprised.
I can't speak to the turtle deduction, unfortunately.
Yeah.
But I can tell you this. The main thing to remember with deductions is the difference between business deductions and personal deductions.
Okay, so business deductions are for, well, businesses, right? Like, if I own a bakery, I can deduct the cost of flour and sugar.
Exactly. Those are considered expenses directly related to generating income for the business. And it's not just ingredients, right? Salaries, rent, utilities, advertising, all those things can be deductible business expenses.
Makes sense. So what about personal deductions then? What are those and who can claim them?
So those are the deductions you can claim on your individual income tax return. And they can really make a difference in how much you end up owing. Some common ones include things like deductions for home mortgage interest, state and local taxes, although there are some limits on those now, charitable contributions, and certain medical expenses.
Right. I've definitely heard of those. But you mentioned limits. What's the catch there?
Well, with taxes, there's always a catch, right? For example, did you know that you can only deduct 50% of business meals and entertainment expenses?
Wait, seriously, only half. Why even bother?
Well, it's all about balance, I guess. Policymakers, they want to incentivize business spending, but they also need to make sure the government has enough money coming in. So it's a compromise. You can deduct some of those expenses, but not all.
Right. A delicate dance, for sure. Speaking of complex tax rules, can we talk about the AMT for a second?
The AMT.
Yeah, the alternative minimum tax. I've heard, like, whispers about it, but I honestly have no idea what it is or who it affects.
Yeah, the AMT. It's it's basically like this whole other tax system that runs in the background.
Yeah.
It's designed to make sure that individuals and corporations who have a lot of deductions and tax breaks don't end up paying a way lower tax rate than they should.
So it's like a safety net for the government to make sure the wealthy are paying their fair share.
You can put it that way. The calculations get pretty complex, but the basic idea is if your income and deductions are above a certain level, you might find yourself subject to the AMT. And that could mean a bigger tax bill than you were expecting.
Fantastic. Something else to worry about. But seriously, this all just makes me realize how important it is to have a good accountant. They're like the tax whisperers or something.
I couldn't agree more. Having someone who really knows the ins and outs of the tax code can be invaluable. But even just having a basic understanding of how deductions work can help you make smarter financial decisions throughout the year, not just when it's time to file your taxes.
That's good advice. Okay, so we've covered income tax, deductions. What about these payroll taxes you mentioned earlier? I feel like most people just assume that money goes straight to Social Security and Medicare, right?
It's a common assumption, for sure.
Yeah.
And while it's true that payroll taxes do fund those programs, it's a little more, nuanced than that.
I knew it. There's always another layer, isn't there?
Yeah.
All right, break it down for me. What exactly are payroll taxes and where does all that money go?
So payroll taxes, they're taken directly out of your paycheck, and your employer matches what you contribute. That money goes to fund Social Security, which provides retirement, disability, and survivor benefits. And it also funds Medicare, which is health insurance for people 65 and older. And then there's unemployment insurance, which gives temporary financial assistance if you lose your job.
Right, right. So that explains where a big chunk of my paycheck goes every 2 weeks. But you said something earlier that kind of got my attention. Something about how the share of federal revenue coming from payroll taxes versus like corporate income taxes has changed over time.
Ah, yes. That's an interesting point. Since the 1950s, the percentage of federal revenue that comes from payroll taxes has actually increased quite a bit. Meanwhile, the percentage that comes from corporate income taxes, it's actually gone down.
Wait, really? So as an employee, I'm paying more, but corporations are paying less. Something doesn't quite add up there.
It certainly highlights how tax policy has shifted over the years, and it raises some important questions about how we fund the government and who bears the responsibility. But maybe that's a discussion for another deep dive.
Agreed. Okay, so we've talked about income tax, property tax, payroll tax. I'm sensing a theme here, but there's one more tax we have to talk about before we wrap up this episode.
Sales tax. And I'm sure I'm not the only one who feels personally victimized by it. Oh, sales tax. You mean that magical moment when you're at the checkout? You've already mentally calculated what you owe, and then bam, the cashier announces the total, and it's like $10 more than you thought.
You get me. It's like a punch to the gut every single time. Even though I know it's coming, that sales tax always gets me.
Right. But hey, at least it's not, a federal tax.
Right.
Right. We have that going for us.
True, true. Unlike those other taxes we've been discussing, income tax, payroll tax, those are all like firmly under the federal government's control. Sales tax, that's more of a state and local thing, right?
Exactly. And that's where it gets kind of crazy. Because without that federal oversight, well, let's just say there's a lot of variation from state to state.
You're telling me. I swear, some states, you barely even notice the sales tax, and then others, it's like they're tacking on like a whole other purchase at the register.
And your Wikipedia article backs that up. The range of sales tax rates across the U.S., it's wild. We're
Wow.
talking less than 1%, all the way up to, get this, over 10%.
Over 10%. Ouch. That's a big difference. So if there's no like federal sales tax, why is there such a huge range from state to state and even within states, right?
It all boils down to how states and local governments decide to fund themselves. Some states, they lean heavily on sales tax. Others, they prefer property tax. Others rely more on income tax. It's all a balancing act, really, driven by politics, by the economy, even just by, historical quirks.
So basically, it's a giant financial jigsaw puzzle, and each state's got to figure out how to make their pieces fit.
Pretty much.
That's fascinating, honestly. But speaking of unique financial strategies, can we talk about the U.S.'s reputation as a tax haven? Am I using that term correctly?
No, you're spot on. Because even though the U.S. has this, this big complex tax system overall, certain states have definitely made a name for themselves by being, shall we say, tax-friendly. They're attracting people and businesses who are looking to pay less in taxes.
Okay, you've definitely piqued my interest now. Which states are we talking about here, and what are they doing that's raising eyebrows?
Well, your source article points to a few key players: South Dakota, Delaware, and Nevada. These states, they've become known for their trust laws, their lack of certain types of taxes, and it's making them really popular with wealthy individuals and corporations.
South Dakota, right. I've heard about them. Something about like dynasty trusts where you can like protect your wealth for generations.
Yes, like back in the 80s, South Dakota, they changed their trust laws. And it basically created this haven for these dynasty trusts. And these trusts, they can hold assets like indefinitely. No estate taxes, potentially keeping that wealth within a family for, a very long time.
Wow. That's some next level wealth preservation right there.
Yep.
But what about Delaware? I've always thought of them as like business friendly, but not necessarily a tax haven.
It's how they've structured their tax code, really. See, Delaware, they don't tax intangible assets, things like trademarks, patents, that sort of thing.
Intangible assets. Okay.
So you have these companies, sometimes massive international corporations, setting up shop in Delaware, at least on paper, to take advantage of this loophole. They transfer their intellectual property to a Delaware subsidiary, and poof, a big chunk of their potential tax burden, it's gone.
Wow, that's pretty clever. Sneaky, but clever. And what about Nevada? What's their specialty?
Nevada keeps it simple. No state income tax, no personal income tax, no inheritance tax. You get the idea.
Sounds like a dream for anyone trying to avoid taxes.
It's a big draw, for sure. And to make things even more appealing, Nevada has very strict privacy laws. Makes it really tough for, say, creditors or even the IRS to track down assets held there.
Wow, so it sounds like we've got a lot of tax avoidance going on, but surely this kind of system has its critics, right?
Oh, absolutely. These state-level tax havens, they've been under a lot of scrutiny lately, especially after those big leaks like the Pandora Papers, remember those?
Yeah,
Really expose how much money is being sheltered in these
right,
states.
right. Those were a big deal.
Critics say these havens, they just make wealth inequality worse.
Hmm.
They take away money from the federal government, money that could be used for, important programs, and they say it creates an uneven playing field, right? Where some people and businesses are playing by the rules and others are, well, finding ways around them.
It's a tough one because on the one hand, you've got states that are like trying to attract investment and boost their economies. And on the other hand, you've got these concerns about fairness and, the overall health of the tax system.
Exactly. It's a complicated issue with no easy answers.
Hmm.
And it really makes you think about the role of government, the balance of power between the federal government and the states, and even, the future of taxation in a globalized world.
Deep stuff. So much to think about.
This whole deep dive has been a whirlwind of information.
It really has. We've covered so much ground. We talked about how the U.S. tax system is structured, how it's changed over time, and even these intriguing tax havens that exist within our own borders.
And we didn't even have time to get into all the
All
detail.
right, there's always more to learn. But hey, that's part of what makes this topic so interesting. But before we get too carried away, any final thoughts for our listeners? Any parting words of wisdom to help them navigate this crazy world of U.S. taxation?
I think the most important thing to remember is that knowledge is power, especially when it comes to taxes. The more you understand the system, even just the basics, the better equipped you'll be to make smart financial decisions,
Yeah.
reduce your tax burden legally and ethically, and just generally feel more confident during tax season.
Absolutely. It's not just about like filling out the forms correctly. It's about understanding what those forms even mean and how they fit into the bigger picture.
And hey, remember that statistic from the Wikipedia article?
Yeah.
The one of how simplifying the U.S. tax code could potentially boost the economy by like trillions of dollars?
Oh, yeah. Now that's what I call an incentive for reform.
Right.
Yeah.
Just imagine a world with a simpler, more efficient, more transparent tax system. Could mean a stronger economy, more fairness, and maybe, just maybe, a little less stress for all of us come tax time.
Now that is a future I can get behind. We've only just scratched the surface here, but hopefully this deep dive has, piqued your curiosity, given you some food for thought, and maybe even empowered you to take a little more control over your own tax destiny.
And remember, the learning doesn't stop here. Now that you've got this foundation, you can go out and explore the areas of taxation that interest you most. Become a tax expert in your own right.
Love it. So until next time, happy exploring the wild, wacky, and yes, even occasionally wonderful world of U.S. taxation.